Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we are talking about a great big oil company, ConocoPhillips. So let's go ahead and get into the daily stock analysis. I picked ConocoPhillips today because one of you, the viewers, wrote in a request and you asked me to review ConocoPhillips. So this is for you. If you have a request, put it into the platform, whatever you're listening to on YouTube or Facebook or on Twitter, on Periscope, put into the platform a stock that you'd like to learn a little bit more about. Now, I will tell you that there's a lot of people that are asking for me to do reviews, and there's about 5,000 stocks that exist, and that would probably take me about 13 years to finish. So keep listening over the next 13 years. Now, I'm not telling you that I won't ever get around to it, but go ahead and keep continuing to put in your request, and I will get to it. I try to put in some of the bigger companies like the Microsofts and the Apples, because I think those are significant companies that we need to look at and that would benefit a lot of people. And ConocoPhillips is a company that actually is of interest to a lot of people, not just here in Houston, Texas, which is where they're based, but around the world, because they have operations that are around the world. And in just a moment, I'm going to show you a short little video that tells you the diversification of the company. But one thing that I did not put into that video was something that gives you an idea of where they actually do business. If you had a picture of the planet Earth, that's where they do business. They're everywhere. It's one of the largest oil companies in the world. So let's go ahead and begin and talk about that particular company. And before I do that, though, I want to remind you that if you need help gathering assets and putting your retirement plan together or putting a financial plan together, I help people personally here in Texas. Go over to my website, which is at richardsfinancialplanning.com, and you can learn a little bit more about that. Now, the person that wrote in and said, I'd like to learn about ConocoPhillips, they asked a question. They said, is ConocoPhillips a value trap? I'm not 100% sure how to interpret that, but they might be referring to the fact that this is considered at this point to be a value stock. And is it just a trap? Is it just going to be something that we go into and it never goes up? Well, that's what we're going to talk about today. I don't believe it is a value trap. They're actually paying the people who are shareholders handsomely to use that particular stock or to own that stock. And different stocks are kind of like cars. When I was younger, my family, I had 2 young children, and we had a minivan. That's because that's where we were in our life and we needed a minivan. There are some stocks that work better at different points in your life. This may be better if you're looking for a dividend stock, you're looking for a longer term profit, or you're looking for something that's going to build value over a period of time. It might not be for you where you are now. I mean, I'm older today. I don't have a minivan anymore. I have a 4-wheel drive that I drive on the beach. It just depends on where you are in your life. So it just depends. So let's get started and talk just a little bit more about this particular stock. Let me make the screen just a little bit bigger for us so that we can all see what's going on here. Okay, let's learn a little bit more about ConocoPhillips today. Here we go. Okay, ConocoPhillips, $32.6 billion, changed on an hourly basis. But let me ask you a question. Before you listened to this or before you saw this, did you know what bitumen was? Do you know what it is? I really wasn't that familiar with it, so I learn stuff every day when I do these reviews. Bitumen is actually something that they utilize to build roads with. I imagine they use it to make asphalt for roads. They also use it to make shingles for roofs. So it's a significant resource, and it's not mined. It's actually taken out of the ground in Canada. That's where ConocoPhillips has its largest operation for extracting bitumen. So let's talk just a little bit more about this stock and see how things are working. Let's see if we can click on the right buttons over here. All right. One of the biggest things right now going on with ConocoPhillips is they are in the process of purchasing Concho Resources. Concho is a big company that's here in Houston too, and it's not going to be a cash purchase. It's actually going to be a stock exchange. But that's two big companies going together to make an even bigger company. And the CEO, Ryan Lance, his quote was that it'll be the marriage of really two great companies. And I agree with him on that. I think it's going to be the marriage of two great companies. Now, we saw the value of this stock actually go down, in the past couple of weeks. And probably the biggest reason that it went down was because it had dismal third quarter returns. If we look at it from the standpoint of dollars, they lost about $450 million in the third quarter compared to last year, where they were actually had a profit of $3.1 billion. Now, don't let that distract you, because I think that there's some more value that's to come forward. When we look at stocks, we don't really look at stocks. We look at the company. We want to look at the stability, the earnings, and the competitiveness. And based on that, that's what's going to help you to understand whether this is a good company or not. And I use a principle that Warren Buffett has popularized, which is called finding the moat of a company. And Warren Buffett basically said that in business, I look for economic castles that are protected by unbreachable moats. And what he was meaning there is he's looking for that invisible barrier that's between ConocoPhillips and between its competitors like Exxon and Chevron and the Chinese oil company and the Mexican oil company, all of those. If you look at what some of their moatiness is, their benefits, you can see that they've had some significant cost-cutting efforts that have been going on. And the biggest thing that they've done is in the United States and also in other countries, they've actually been able to reduce the cost of extracting a barrel of oil by about 30 to 40%. Plus, they've also had some technological innovations. They have an operation now of recycling water in their operations, which actually makes them a more ESG or environmentally, socially governance friendly. They also have reducing methane emissions and stormwater management, and they also are working to optimize power. One of the biggest benefits they have right now is when they combine with Concho, they're also acquiring more properties. They have a property that they just acquired in Canada. It's the Montney Shale. It is 140 acres in Western Canada, and that's a big benefit going forward too. Now, if we look at the spaghetti graph, this is how they're going to compete. Now, we talked a little bit about some of the advantages of how they might be stable. That's the S of the SEC that we just talked about. When we look at the spaghetti graph that you see in front of you, let me identify for you some of the companies that are here. We've got ConocoPhillips, ExxonMobil, Royal Dutch Shell, Chevron, and PetroChina. The biggest performer that we've seen in the time period since the pandemic has actually been Chevron. I would say that really Exxon and Royal Dutch Shell have been on the bottom from that. PetroChina has been right around in there with ConocoPhillips. One of the biggest things that's going on with all of these oil companies is they are paying you to wait around. ConocoPhillips has dividends, and that's a big, big benefit from that standpoint going forward. Now, I think that when we look at the benefits or the dividends really from ExxonMobil, don't be distracted by that, because there's a profit level in there that they have to be able to maintain. And there is some question as to whether that dividend can be maintained by ExxonMobil. Now, what ConocoPhillips has basically said is that as long as they have the value of an barrel of oil around $40, then they're probably going to be able to maintain that dividend. Although the price of the stock right now is falling right now, oil is right below $40. So we're right in that range. The bulls, when we look at what the different analysts are saying, the large domestic properties are a big benefit to ConocoPhillips. And that's something going forward. Size does matter when you are a big oil company. Dividends should be able to be maintained, as I mentioned just a moment ago. If you get around $40 a barrel, which is where we are now, a little bit below that, then they should be able to maintain their dividends. And then one thing that they've actually stopped doing in this acquisition of Concho Resources is repurchasing stock. Now, when you repurchase stock of a company, what ends up happening is you see that 5.26% dividend that's being paid out. That dividend no longer goes outside of house. It doesn't go outside of the company. It stays inside as a resource. So that actually saves them money, and it builds their finances, and that's a really big benefit going forward. Now, everything's not rosy. Obviously, it's not rosy. If you look at the price of oil today and where it's gone over the past year, you're going to see that. What the bears are saying, the analysts are saying, is that some of the smaller companies are actually able to find resources easier. And that kind of makes sense. But look, I'm going to bring to your attention this. During the 70s into the 90s, there was the Magellan Fund, which was managed by Peter Lynch at Fidelity. And it got to be so huge that people thought there's no way that he can find new investments. Well, you know what? He still did. So don't count out companies like ConocoPhillips because they're so large. Warranted, yes, some of the smaller companies do have advantages, but don't discount the company just because of its size. The other thing is right now that some of the analysts are saying is that the modest presence in the Permian Basin is a negative for ConocoPhillips. If you compare it to the properties that Exxon and Chevron have, that weighs against them. The other thing is that if prices continue to stay down on oil and profits continue to stay down, the only way that they're going to be able to maintain a dividend at ConocoPhillips is they acquire debt, where they're actually borrowing to continue to pay shareholders. They can only do that for so long. The other thing would be they just basically reduce the dividend, which I know that they really don't want to do. When we look at the income, this is just a repeat of what I mentioned in the very beginning. You can see that they have had net income losses, and you can see where all the losses occurred over in the right here. Now, one thing this is just my opinion from analyzing this stock today. We're going to talk about some of the valuation issues and where it might be good to buy and what you might be looking for. But I don't really believe that you're going to see ConocoPhillips return to profitability until the pandemic subsides, till we get a vaccine, or until, for some reason, oil reaches $60 a barrel. There's all kinds of different reasons. I won't even speculate on why that would happen. But if one of those two things happen, or when one of those two things happen, then what we're going to see is we're going to see a return to profitability of a company like this. So let's look at the earnings, since that's what we're talking about. When we look at the chart that's in front of you, the red's really picked because that's just a color for ConocoPhillips. I didn't pick it because it's a negative implication. I just thought of that. I wanted to get across to you. But the point I want to make on looking at the chart that's in front of you is that most of the time when they came out with guidance, they were pretty close to it. So they were pretty close within their profitability range. And they're continuing to bounce back. They're continuing to move forward. And as the economy picks back up on a worldwide basis, we're going to see it move forward. Now, I said this back in May when I did a recording on which investments might be good for buying during a recession. And it applies today that we have to look at what the pandemic is going to do to the economy and how it's going to come back and how it's going to go down. When you look at the recovery, I know a lot of people talked about a U-shaped recovery. I was never an advocate of that. I always thought that it was going to be more like a W. It's going to go and it's going to go forward. It's going to come back, and it's all going to be based upon resurgences of the virus in itself until we get some sort of herd immunity. Might be a long time off, but until we get some sort of vaccine, even the therapeutics are going to only have a limited impact on it because people have to be usually in the hospital, or they're still going to be out of action for a while by taking the therapeutics. Okay, but let's keep looking forward now. Let's look at the valuations of what the analysts are saying on this stock. This is a rare occasion when we look at a stock that's rated by Morningstar. They don't rate too many companies as a 5-star company. Now, remember, my friends, that when a company is rated on the star rating from Morningstar, it's not like their mutual funds. The only implication that the star rating has on stocks is the value. How close are they to the value? How far over it? How far under it? And when you get a 5-star stock, what happens is it's trading actually at a discount. Today, ConocoPhillips was trading at $30.12. And what Morningstar is saying is that that's about half the value of really what it is based on its earnings and its valuation. They generally look at the EBITDA, the earnings before interest, income, and taxes, and depreciation. Based on all those different factors, they're saying that the fair market value right now is $64. Okay. The analysts are basically saying that ConocoPhillips is a strong buy. Out of 16 analysts that are following this particular stock, 10 of them are ringing the bell and saying this is a stock to buy. Let's look a little bit more at that price. Gosh, if you bought this a year ago, you might be asking yourself, should I really sell this? If you bought it a year ago and you're still hanging on to it, the answer is probably yes, because there's got to be better days ahead. That's for all of us, for everything, folks. A year ago, it was trading at $56.25 and a hair over top on November the 5th of 2019. It has sunk in price a dismal 46.45%. That's not a happy occurrence, but is today a buying opportunity? It could be. It really could be, friends. We're at $30.12. So let's look and see what's happening. Of course, yes, the past performance is not a guarantee of the future results, but let's take a look at what the options are doing, what the puts and the calls are doing on this. Now, I want to bring your attention to this because generally, look, this is, I want to make this just a little bit bigger for you for just a real quick moment. When I talk about the options, I'm not encouraging you to participate in options. It takes a little bit more of an understanding of the stock market to participate in options. What I'm trying to teach you about with options is that they can be a bellwether. They can be an indicator as to the direction of a particular stock. Now, we would think that the indicator is going to be based on the fact that most people that buy options, that's puts and calls, are going to be more sophisticated investors. Now, just a real brief little bit of education here on options. If you're going to buy a call, remember a call is going to be a contract to buy the stock. And a put is going to be a contract to sell the stock. And those contracts in themselves have expiration dates and they have what's called a strike price. That's the price, that the value of that contract. So let's go back to the graph just for a real quick moment and take a look and see what's going on here. If you take a look at the calls, now here, I brought this one up. This is different than I have done in days past. This is actually January 21st, 2022. Okay, so this is more than a year away. This is what analysts, this is what the people who are trying to forecast what the price is going to be a year from now, more than a year from now on ConocoPhillips. Right now, we see that there are around 4,261 contracts out there to buy ConocoPhillips at $40 a share. So this is what's happening. We're at $30 a share right now, and these people are buying this contract in anticipation that if it goes over top of $40, let's say it goes up to 45, if it goes up to 45, then they're going to exercise that call and they're going to utilize it so that they can purchase that particular stock at $40 when it's higher. On the other side of the coin, when we look at the puts, remember the puts is a contract to sell. They may be looking to sell their asset at $35. We've got 5,898 contracts outstanding currently at $35 a share. So if it goes under $35, we're at $30 right now, $30.12, I believe. We're at if it stays under that $35 as we go forward into 2022, they would exercise that contract. Now, another way that people make money off of the options is actually just to sell the option. They never have an intent of holding the stock or of buying the stock. They're just buying and selling the option. If it goes up, they'll sell it. If it goes down, that's the stock itself, and they've got an option that'll benefit them, and they're in what's called in the money, then they'll sell it and make a profit from that point. Okay, so that gives you a little bit more of an understanding of what you have going forward. Let's take another look and see what the analysts are actually saying about this particular stock. Out of all the different analysts that are following this stock, there's not as many that are keeping it updated. If you look at the dates on this, you're going to see that October is probably the more recent dates, even though that we're into November. You're going to see that October is when several of these were put out. Some of them even go back to July. Okay, but if we look at the most recent one is from Bank of America. Bank of America is saying that they have a neutral to buy rating, and their range that they're looking at right now is between $28.62 and $44 per share. It's a pretty wide range, but they're more in the buy column. Same thing with Trussit. They have a fairly high price target that they're looking at. They're looking at the stock trading around 51 to 52. So take that information how you will and use it in trying to determine whether this is a good stock for you to purchase, or whether it would be a good stock if you have it, when you need to sell it. The idea, though, is remember back to what I was telling you before. If you buy 10 stocks, you can estimate, this is just a rule of thumb, and you know, rule of thumbs, there's no guarantee to them. But if you buy 10 stocks, you could count on having 2 of them to do excellent. You could have 2 more that would do really good. You could have 2 of them that would do okay. Then you're going to have 3 or 4 of them that are going to stink. And the idea is to get rid of the stinkers and have stocks that are making more profits and hold on to them, rather than having a lot of transactions that are going on. Remember, I'm trying to help you to have a long-term perspective, although at some point, sometimes you do have to sell things more on the short term. But I'm not teaching you swing trading. I'm not teaching you day trading. These are long-term strategies. And remember that I can't give you direct advice as you watch this. I can give you education and help you to understand it. If you want to talk to me more about it, about investing your assets and trying to find a plan that'll work for you, and you're in Texas, go over to richardsfinancialplanning.com and you can learn more about that. Okay. Keep your comments coming in. I love hearing from people no matter where you are in the world. I am glad to hear from you. And wherever you are in the world, I hope you have a really great evening, and I will talk to you. Hold on. I have to play my disclosure at the very end here. Everybody have a great day. Talk to you tomorrow.